Bitcoin and the entire cryptocurrency markets are pumping today. WTF is up with that? Well, let's talk about it. And as is so often the case these days, we have to talk, of course, about what the dollar is doing, what the stock markets are doing. The US dollar currency index coming down to retest major support again at the 50-day exponential moving average. We have been bouncing off that line of support for a very, very long time, continuing a very strong uptrend for the US dollar. Time will tell if this time is different, but we are currently at support, which is an area of key interest at this time for the dollar index. A bounce here could spell bad news for risk assets like stocks and Bitcoin. Now, taking a look at the stock markets, we have seen a pretty nice little rally going on this week so far. We can see we had this initial breakout beyond this key area of previous support, blasted right through it, didn't act as much of resistance on the way back up, came back down, retested that, moving higher now. 3,900 is a pretty key target here, I think, for equities rallying. So if the S&P 500 gets up there, I think that becomes an area of potential danger of a reversal at that point. So if you're chasing the pump, do keep that kind of stuff in mind. And of course, because the S&P 500 is pumping, Bitcoin obviously is pumping too. More on that in just a moment. Now, a lot of people are starting to talk about, well, we're going to be getting a pivot sometime soon from the Federal Reserve. The next Federal Reserve meeting is on November 2nd. The Fed is widely expected to raise rates again by 0.75%. But we are getting closer to a time when we could expect a slowdown in rate raises. The next one after November, maybe we're only going to be 0.5%, maybe only 0.25% after that. Maybe then they'll stop. That pivot, when it happens, it will come at some point, could release a bullish wave into the market. But you do have to keep in mind this. Yes, a Fed pivot will come, but as the Coeasy letter points out here, a bottom is not going to form overnight, and many investors will soon learn another valuable lesson. The Fed's job is to limit inflation, not to send stocks higher, and controlling inflation right now may require a recession. Now, it was just put out the other day that I think it was Bloomberg or someone like that was saying there's now a 100% chance of a recession in the next 12 months. So whether we can rely on those models or not, a lot of people are still calling for a recession to come, which means that we could still see a lot more pain coming in markets. So it's worth keeping all that in mind when you see these kind of bullish pumps going on. Remember, bear market rallies can be extreme. We can get massive pumps. All you end up doing is putting in lower highs for the market. Also, UK lawmakers vote to recognize Bitcoin and crypto as regulated financial instruments. That's cool. That has nothing to do with our market pump, obviously. It's the kind of news that's great to hear, kind of, if the regulation ends up being positive, but doesn't really move the markets in terms of pumping. Now, before we get into the Bitcoin charts, if you don't have yourself an account on Bybit yet, you need to get one. It's the best place for trading crypto. 0% fees on their spot markets, 0% market maker fees, and use that link in the description to get up to $4,450 in deposit bonuses. So check it out if you are a trader. Now let's talk about the price of Bitcoin. And I want to start off that conversation by talking about the Bollinger Band width. We're currently at one of the lowest levels ever recorded in history. This is basically measuring the tightness of the Bollinger Band. So right now we're down at 0.3. You can see we've previously had readings this low or lower, but it's very, very rare on the weekly charts to see this kind of extreme reading for the Bollinger Bands. Now, when we get this kind of tightness happening, it tends to come before massive volatility events in the market. Now, a massive volatility event, unfortunately, does not indicate always up or down price action. So as we can see, just looking at a few of the recent examples, we had a very tight level back in, well, late 2018. Guess what? That came before a 55% crash in the price. Then we had another very low reading here in April 2019. That came before a mega rally of 250% for Bitcoin. Then we can look here as well, a rather low reading at 0.42 in January 2020. That came before a 63% price decline for Bitcoin. Here in October 2020, we also saw a very, very low reading on the volatility index before a massive 450% price rally for Bitcoin. So the question is, where are we now? Are we in a situation where the volatility is going to lead us lower in the coming days or weeks, months? Or are we going to see a bounce coming in from here? All the bad macro stuff, all the crazy going on would like to indicate a potential lower target. But there's always the bull potential that Bitcoin can come out swinging and go harder. Either way, volatility is coiling up, and it'll probably be pretty spectacular when it does end up happening. Now, zooming into the daily charts here before we finish up. Look here, we came up today to smash right into an area of key price resistance around $20,400. So while this move today for Bitcoin is very exciting, Ethereum had a great move, altcoins had great moves today. It was all very exciting to see that kind of green in the market. It just makes you feel a bit better, gives you a little bit of hope that things aren't so bad in markets, but we did just come up essentially to smash into price resistance. We are over the 50-day exponential moving average, which is nice, but keep in mind that any moves over the 50-day exponential moving average ever since, well, a long time ago, look at this, right back in time here. Any moves over that for a very long time, basically since, well, November last year, have been very short-lived. We're talking days often, 2, 3, 4, 5 days. We'll see the price trading above that. The longest time we traded above that was about 2 weeks back in March, April of this year. Otherwise, we have just consistently been below the 50-day exponential moving average. Is acting as a pretty serious area where we see price tending to falter. So do keep that in mind. That is how it has been acting recently. There's always a chance we'll be bucking the trend now, but the more likely scenario is that we're going to see price faltering in the coming days. So do keep that in mind. We're at resistance right now, essentially. Now, if we break beyond $20,500, that brings us into potential to bring a nice run up to the 100-day exponential moving average around $21,000. That, if we were to break through there, then we could start getting a bit more excited and saying, hey, this could be the start of a major bear market rally. Right now, we don't have enough evidence to say that is what is happening. So keep an eye out for how the price behaves in the next few days. We could see it coming back down a bit, breaking back basically into the range. Not that we've broken out of the range, but just falling back within the range. So unless we get some definitive volume pushing us up beyond 21K in particular, I don't think that this particular move is going to amount to much. Now, if we flip over 21K with volume, then we can start talking about something different. Anyway, that's it for today. Let me know what you think about all this down below in the comments section. Peace out till next time.